According to the IRS, the #1 crime in America today is identity theft. True story. Do you know 3 people who have not had their identity stolen? Guess what? The statistics say that 1 in 4 Americans will fall victim to some form of identity theft. Now, go congratulate your 3 friends who got off easy. Am I telling you this just to make you paranoid? Kick the covers all night? Hardly. I bring good tidings, because you know me, you can beat the odds. If I fail you, I have a $5 million guarantee in place to put your life back together. Yes, it does feel a bit like a superpower, but I refuse to wear the tights. Seriously though, identity theft is no laughing matter. Let me protect you before it happens. cfrn.net/legal shield. You can thank me later. Your peace of mind is waiting at cfrm.net/legal shield.
Hey guys, Dwayne. This is video number 9. 9 consecutive trading days where we have sent out our Concierge Trade Alerts and then followed it up the next day with a video recap. Now, someone sent me an email today and they didn't realize how long we've been at this. We originally did a 3-year public beta test. The results of it are still on Twitter. If you have the time and the energy to do all that scrolling back, you can see what happened during that 3-year period of time. Once we completed the beta test, we then took the product live. And we've been live now for, I want to say 2 years, 2.5. I'm not sure how important that is to you or not, but the question that was asked in the email, once I responded to the email, the response was, "Oh my goodness, I had no idea you've been doing it this long. I thought this was some brand new thing you just, cooked up." We don't change much. The trade setup that we use every morning in the live training room, the indicators, the time frame, the strategy, we haven't changed a thing in a little over 4.5 years. If it's not broke, don't fix it. That's our philosophy. And so we're content to, we're kind of like factory workers. We don't lead this exciting, adventurous life, of a high-flying financial wizard / trader. We get up every day, go to our desk, whether it's downtown or at the end of the hall or in a hotel room somewhere, because every month you trade from a different country because you can. Wherever office is, you get up and you go there. And now my platforms run 24/7. You may not do that, but you sit down, you assess the markets. Now, some people will tell you about their daily routine. Well, first I read the Wall Street Journal. Okay, so now I'm filling my head with somebody else's opinion of what's going to happen today. And then other people will tell you that, and then I turn on CNBC because that first show before the market opens, again, I'm filling my head with someone else's bias. Okay. Now, I'm not saying that, I'm not trying to paint them as bad actors or bad characters, not at all. It's just that they have their opinion of the market, and if you put 10 people in a room, you'll get 10 different opinions. What really matters is what's in front of you. If all 10 of the talking heads told you that, yep, because of blah, blah, and blah, the market's gonna, tank today, blah, blah. Okay. Well, what if it doesn't? What if, for some reason, and trust me, by the end of the day, they'll have a reason why. They'll know with certainty. You heard it in their voice. well, this happened, this earnings report came out, that turned the market. I mean, it never stops. And it's okay. I'm not knocking any of that. All I'm suggesting to you is come to work with a clear head. All right? Trade what's in front of you. This morning, if you are on our trial, if you are a CFRN partner, if you're a Concierge Trade Alert client, or if you're a combo, which means you're both a partner and a concierge client, if you showed up to work, well, if you're one of our overseas partners, you may have shown up right here at the London Open. This is where the market opened for trading in London. London has a open just like the US has a open. Ours is on Wall Street. Theirs is actually in London City, which is a walled off little city inside a city called London. Inside London is London City. True story. Okay. I don't know if they ring a bell or not. So you might have been gently sleeping, or you might have been trading. Concierge Trade Alert last night said, if you get the chance, buy 23.39. Now, our partners and clients knew that we had a weekly trading zone right overhead. Now, these are this week's zones. Remember, we don't reveal this week's zones to the general community at large until Thursday. The partners get these numbers at 6:15 a.m. on Monday. Now, these are the same numbers that I sent out Monday morning. As the week progresses, we don't change them, massage them, manipulate them. They are carved in stone. And so in the live training room this morning, which opens at 9:30 Eastern, I pointed out to everyone, now we do our actual trading on a range chart. Every candle is 4 ticks tall. It has nothing to do with a tick chart. I wish they'd named it something different. You see how these candles are all different sizes? What a range chart does is it gives you some incredible symmetry. And I can show you better than I can tell you. So if you come tomorrow morning, we're going to have an open house tomorrow. And you're invited. So I'll make sure you know how to get there before this video is over. Now, some people immediately would think, oh, a 4-tick chart, that's too fast. No human being could ever trade a 4-tick chart. You'd have to be a computer. No. A 4-tick range chart has nothing to do with transactions. A true tick chart measures transactions. Like if you're running an 89 tick chart, why 89? Because it's a fib number, and people love to trade fib numbers. I don't want to burst any bubbles, but I tried to find that. I chased that magic for a long time. Now, trust me, I pull fibs all the time. Regular fibs, reverse fibs, I do fib extensions. I'm very familiar. In fact, there's a 3-part article out on the internet. You'll find it on our site, on Daniel's Trading. You'll find it at INO. You'll find it, oh gosh, it's been published a number of places. Just Google, I think fib tips for Emini traders is part 1. And that'll lead you to part 2, and that'll lead you to part 3. I don't really break any new ground. It's more of a primer for those folks who have a trading platform that allows you to draw fibs, like from the low here to the high. We had a 24% retracement, and then we overshot that. And so all night we've been consolidating right below the weekly trading zone between the 24 and the 38. Mostly we're consolidating right here at this 24% retracement. Now, when the market opened, what I told everyone in the live training room is I said, all right, guys, we've already triggered. We triggered at 3 a.m., the London Open. We've gone up 2.5 points. We've gotten back below the trigger. So that resets it, and it becomes an entirely new trade. I said, now we have this zone right overhead. Watch for potential consolidation. And so we got a little over an hour of consolidation. Now these are 30-minute candles. So if I had it on the 4-tick range chart, you would see a whole lot of candles all hugging this area. Okay? At this now at 9:30, we got the 9:30 candle that closed at 10 o'clock Eastern, got us back below the trigger. And then the candle that opened at 10 a.m. Eastern, that triggered us back into the market. Now it ran us up to, in that first 30 minutes, we got all the way up to 44.50. So from 39 to 44.50, that's 5.5 points. I said, you'll want to, possibly tighten your stops here. I mean, that's a beautiful day. The first 30 minutes of the day, 5.5 points. And I'll take that all day long. Okay. I said, but let's see what the day brings. We get another green candle. We get another green candle. I said, guys, it looks like the market wants to head. If we can take out this high, looks like the market wants to go to the zone overhead at 55.56. And so you can go back and listen to the radio show and hear what I really said, because that's really what I said to the best of my recollection. And sure enough, up she goes. And at 12 o'clock, when this candle opened, oh, that's right, you'll only be able to hear the radio. We don't publish the live training room videos, but not to the general public. But the radio, of course, we do. So at 12 o'clock, the radio show starts, and this candle opens. And I immediately tell the office, guys, the audience, it looks as though we're headed for the zone overhead, 55.56. So if you got in anywhere in this candle, let's say you were late to the party. You didn't get in on this 30-minute candle. You got in over here. Okay. Now, that's a healthy day in and of itself, but we'll go over here. That opened at 51.50, and it put in a high at 58.25. So let's be really conservative and just pretend that it only went from 51 to 58. We never get out at the swing high or swing low. I know you get tired of hearing me say this, but it's important that you understand. We trail our stop, so we're always going to leave a little on the table. Now that really aggravates some folks, and they're constantly trying to wring every last tick out of a trade, and it's not good for you psychologically. Don't do it, okay? Just don't do it. 8 points. Sweet. Now remember, the first 30 minutes gave up 5.5, and then if you followed my advice 30 minutes later, it gave you another 8 points. The entire move from 23.39 to the high of the day was 19 points. Okay. Now, if you go back and listen to the recording of the show, or if you were there, you heard what I said. I said, guys, as we get to the zone overhead, one of three things is going to happen. Every time we get to a zone, one of three things happens. There's very few certainties in the world of trading. I'm going to tell you something now that you should really write on the tablet of your heart. It'll be valuable to you in your trial, and if you become a partner, of course, it'll be valuable to you. When price reaches a weekly trading zone, it's going to do one of three things. The most likely thing is consolidation. The second most likely thing is rejection. And the third most likely is a hot knife through butter. That's where it just goes right through that zone like it's not even there. When that happens, in most cases, it will pull back to the zone, consolidate, signifying that that is going to be a good support level, and then it'll take on off for the zone overhead. It creates, now it didn't exactly do it here, but I mean it's just a very simple pattern. It goes like this. You break through the zone in one candle. Hot knife through butter. Price then pulls back to the zone. Price then consolidates. Price then goes to the zone. Exactly like that? No. But now that I've shown you this, you won't ever be able to forget it. Unless you're drunk or something, I don't know. Or on some kind of mind-altering substance. You're going to see this pattern, okay? Breaks, pulls back, firms up, consolidates, and then boom. That's a nice run. From 43 to 55, that's 12 points. That's $600 per contract. The S&P pays $50 per point. Okay. Now I told the audience way ahead of time, guys, when we get to the zone, tighten your stops because there's a very good chance that we will consolidate or get rejected. We certainly didn't get rejected. We consolidated for, well, now remember, this isn't part of the candle. I should pull that down so it's not touching it. Yeah, there we go. 30 minutes, an hour, hour and a half, 2 hours, 2.5 hours, and then all of this here, that's consolidation too, just below the zone. All right. Now, by the time the markets open in the U.S. tomorrow morning, price will either be on its way here or here. Your question, of course, should be, well, okay, how do I know, and how and when do I get in? Come to the open house in the morning and I'll show you. Okay? The secret to trading, if there is a secret, is to not find some hidden, obscure thing in an urn, in a cave, in the desert somewhere, but to learn to see what everybody else sees. Because most people in futures are technical traders, except in the ags and in some of the energies, you get fundamental traders. and there's some hybrids, but by and large technical analysis. And so when a large group of people see a known pattern of some kind, they're going to behave in a specific manner. And so as soon as you get the first indication that they're doing what they were taught to do, all you got to do, and they are, in my mind, the market, okay? All you got to do is ride their coattails long enough to get your goal for the day. Then put the stinking mouse away, all right? Now, if you're a zone trader and your goal was a zone overhead, that's when you put the mouse away. If you're just looking to make 2 points a day, once you had your 2 points, put the mouse away. But don't just jump out of a trade that's going in your favor. Tighten your stop up and let the market take you out, okay? You know, if I feel like, you know what, I've got my 2 points, so there's 2 1/4, there's 2 1/2, it's still moving, I would be foolish to jump ship just so I can go, wee, I got my points. What I can do, though, is I can tighten my stop up, you know, maybe 3 ticks behind price. So what I'm doing is, if it comes back 3 ticks, I got my goal and then some, or at least got my goal for the day. But if it continues, I've left the door open for more, okay? I'll always accept more if the market wants to give me more. Now, I discussed this tonight in the Partners Workshop. When I first started trading futures, I was trading the S&P, and I was looking for 8 ticks a day, you know, the old 2-point deal. And I would not take 6, I would not take 7. It was 8 or nothing. I grew up pretty quick and realized that was foolish. I mean, why not? What's wrong with 2 4-tick trades? Nothing. That's 8 ticks. But I don't know, it was like some kind of He-Man thing, or combination of that and road rage, maybe. Finally, I got over it, okay? If the market wanted to dole it out, you know, 4 and 4, 6 and 2, I'm okay with that. However, I didn't just jump ship at 4, because with an 8-tick risk, my goal has to be 8 ticks. It can never be less than 1-to-1. But I can sure, once I've reached my goal, I can sure make that stop tight as I want. You know, I want to give it some room to wiggle in case the door up on a long trade swings wide, and who doesn't want 19 points? I do, if that's what the market's willing to offer. But if it's only willing to offer me 7 ticks, I'll take that too, okay? And it'll take me some time to teach you this. That's why we have a 90-day mentoring program. I'm just not as talented as that guy on late night TV on the infomercial who will teach you to trade in 5 days for $7,000. Man, I wish I was that smart. But I'm not. It takes me 90 days to teach you. So for the inconvenience, I charge you less than half of what he wants, you know, a fraction. So we're going to consolidate, and by the time we meet up again tomorrow morning in the live training room, price is going to be headed for 72.73, or it's obviously going to be headed for 42.43. Again, there's very few certainties in the markets, but I'm real comfortable making that statement. Now, I didn't show you the evidence. Everybody always wants the evidence. How do I know that's what you really sent out? Great question. You don't. I could be showing you some cheesy, fake, made-up email. Day after day after day. And recapping it in front of a live audience. Okay. Last night, I was late again. But boy, I was sure early today, 8 o'clock tonight. Last night was 11:15. And I had an error. Lars emailed me and says, Dwayne, I think you messed up on the ES. And he was right. The correct numbers were 39 and 330. Okay. Now hopefully you've had time to do your screen grab. You can always pause, hit pause and write them down. Okay. This way I don't have to keep dragging it back and forth. Alright. The good news is the correction went out at 11:30 and the first trigger didn't happen until 3 a.m. and the second trigger happened at 10 a.m. 9:30 we got below the trigger. 10 we triggered again. Alright. Now we're going to go fast. On the Dow we said to consider buying 2375. 192 points at $5 per point. Price pulled. Now, this isn't a typical hot knife through butter. Okay, this one is, but it didn't pull back. You know, sometimes things don't work out. Here, because this touched and we consolidated for an hour underneath the zone. And then hot knife through butter. Then what did it do? Pulled back. Then what did it do? Consolidate. And when it consolidates, it's making up its mind what it wants to do next. Now, typically, it will move in the direction that it spiked through. This time it didn't. It's traded lower. And so you can see, if you look at the horizontal axis of my cursor, does that look like a double bottom to you? From here to here? So what happens in the next 30 minutes could be very important. If we close below this or this, how much time's left in this candle? Because this is a live chart right now. It's 9:20 in Phoenix. I'm on Pacific time, so that means it's 12:20 on the East Coast. So we're getting pretty close to the London Open. This candle has 9 minutes of life left in it, and then we're going to get a new candle. And it could just be more sideways nonsense. Here's another thing. The majority of the movement I found in a 30-minute candle is in the first and last 10 minutes. That doesn't sound like much. I originally applied that rule to an hourly chart where it made much more sense. The last 10 minutes of a candle and the first 10 minutes of a new candle, that's where you will often see the majority of the movement. I could go into all the reasons why, but you probably don't want to know, so I'll just keep going. 192 points, $5 a point. Nobody got out at the exact swing high, except by accident maybe. I would suspect when it started to pull back, people probably cut bait and said, you know what, I'm going to just, this is just an incredible day. I'm going to take what I got, I'm going to let it pull back, and then if I have evidence that it is going to attempt the next zone overhead, and yes, there is another zone overhead, but it's way up there at 206.45/50. Okay, so could we see that tomorrow? We could. Once we get 2 points below this double bottom, I'm ready to be short back down to 450. Now the zone overhead, I I said it was 206.45. 206.45. So 645/50. Okay. So if we close 2 points below this little double bottom, then I personally would be content getting short, looking at 45.50 as my target. That's a 7, well, no, it won't be, it'll, let's say you got in, where are we at now? 15. Let's say you got in at 205.10 or 205.5. That would be 55 points at $5 a point. That's not a grand sum of money, but it's not too shabby, especially if you're a, if you've graduated, if you've earned your way up to trading 3, 4, 5, 10 contracts. Keep in mind, to trade 10 contracts on the S&P, Dow, Russell, and NASDAQ, it's only $5,000. It's $500 per contract. Now you also have to have room, extra money for drawdowns and stop outs and whatnots, okay? But the S&P as an example, when you buy one S&P contract for $500 margin, you're controlling over $100,000 of equity in the S&P best of breed. Go to your stockbroker, lay down 5 $100 bills, and tell him you want $100,000 worth of stock. He'll call security because you've obviously lost your marbles. But we do it all day long. Okay? Maybe you don't know about futures. Maybe you think 80% of all futures contracts expire worthless, like options. No. A futures contract never expires worthless. It might, at the end of the life of that particular contract, right now in the Dow, S&P, Russell, NASDAQ, we're trading the June contract. When the June contract runs out time-wise, you can roll forward into the new contract. It might be at a higher price, it might be at a lower price, but it won't be worthless. Okay? So, got to dispel that myth. And over the last 8 videos, maybe I did not dispel it. Okay? Now, when I said 2 points earlier, I was thinking S&P. You really want to be you know what, 2,500 is a big round number. So if you wanted to go 2490, that would give you a 40-point potential run down to the zone. Okay, that's $200. If you've worked your way up to 10 contracts, that's $2,000. And that's not a bad way to end the week. Okay, trading is risky. You can lose all of your money and then some. You must speak with a licensed investment professional before making any investment decision, because that's the law. You have to speak to a broker to open an account, and they are a licensed investment professional. So there you go. Soybeans by 951 ran up 4 3/4 points. Soybeans paid $12.50 per tick, 4 ticks to a point. It's $50 a point, just like the S&P. So 4 times 50, $200. And then 3 ticks, $75, or no, $82.50, whatever. You get the picture. Each point's worth $50. All right. And then we never triggered on the sell side. Okay. Crude oil. On the long side, it was just choppy, and you might have picked up a little something. I mean, or you might have just got stopped out. Our trades do get stopped out sometimes. On the short side, 50.90, $24 ticks at $10 per tick, $240. $260, $320, $270. That's what the market made available. How much you took, that's between you and the market. Bonds never triggered. Now, we had a day this week where the bonds ran got 1,500 points. And after a wide range day, you can typically have a day or even 2 of consolidation. You definitely had the one day. This really wasn't a consolidation day, but it just didn't trigger. Well, let me see. This morning, or when I measured it earlier, it never triggered. Let's see, did it ever trigger? Oh, those are the ones that went out tonight. Where'd Wednesday go? What kind of a crazy mistake did I make? Oh, I guess when I sent out the apology email, I better pull up the apology email. Partner alerts, April 19th. Okay. What do we got? Wednesday evening, 11:30. Okay. And so on bonds, we were looking to sell 153.18. And it never got there. So no trigger for bonds. That's sort of like no flowers for Algernon. Who remembers that classic? We had to read that in elementary school. Or junior high, or I don't know, somewhere. The NQ, we said by 54.09 if you got the chance. Ran up 42 points at $20 per point. I only do the weekly zones right now for the S&P, the Dow, the Russell, and Crude. Okay. So that's $800 plus run. Wherever you got taken out is where you got taken out. Okay. All right. Gold. Gold was another rough one. I mean, it gave up very little down here and very little here. Just now, yesterday, in 30 minutes, gold gave us $1,000 per contract drop. And so to expect a day of consolidation after that, we were just too narrow with our computations last night. I never claimed to be perfect. I always do my best. I always do my best job, but I'm not perfect. Okay. Just get that out of the way now. so you don't have any unrealistic expectations. Last, this is it. We do 8 markets every day. Russell by 1370. It ran up $250 per contract, got back below the trigger, and then it ran up 13 points at $50 per point, $650 per contract available. And we've been consolidating inside of that zone since 12:30 this afternoon, basically. Do we have a zone overhead? We do not. That is our highest weekly trading zone for the Russell. So does that tell us anything? I don't know. If it were the S&P, I would say, guys, look for the markets to trade lower tomorrow. It's the Russell, small cap. There's 2,000 companies compared to the 500 large cap companies in the S&P. But that's an awful lot of hours to consolidate inside of a 1-point zone. From 12:30, it's currently midnight. 12 hours inside of 1 point. Well, it popped out here and it popped below, but it kind of lived in a 1 point range. Okay, so that's it. That's all 8 markets on what I believe is day 9. Maybe it's day 8, day 9. I'll number it as I upload it. And now I know a lot of you, your trial is running out. We do allow 1 trial every 6 months. We do track by IP address, and when you come in with some other, and the IP address pops, it's awkward. If you really need another week, call and talk to me and have a mentoring session. Let's get to the bottom of your questions. Let's figure out what it is you're really not sure about, what it is you're really not certain about, and let's address it and see if we can get you on the right track. Doesn't mean I won't give you a little extra time, but I do have to be fair to the other partners who have committed their time and treasure to learning the system. So, or maybe you took a trial a month ago, but then you had to go for oral surgery, gingivitis, I don't know, you're out of action for a week. We are known as the people of the second chance, but we're not doormats, okay? And sometimes people, I can get a little, I'm a pretty patient guy, but I get a little aggravated when I run an IP address and I see, a page full of trials or trial attempts in the last 30 days. I mean, come on. During your trial, we train you 2 hours a day for 5 days. You get to have a private mentoring session. You get to ask as many questions as you want via email, by telephone, in that mentoring session, during the training room every morning. You can ask all the questions you want. We won't be snarky. We won't bite your head off. We'll give you the best answer that we can. We're not there to judge you. We're there to help you. So, make the most of your trial. Okay? I mean, we're not talking about, some crazy new indicator that might work. We're in our 2nd decade of broadcast history and training traders. We haven't changed a whip stitch in 4.5+ years. In the live training room, it's the same time frame, it's the same indicators, it's the same trading strategy. Now, you don't have to learn one strategy for gold, and then we'll sell you another one for the S&P, and then we'll sell you another one for the Dow. No. We teach you one strategy, and once you learn that one strategy, you can come in every day, scan the market, see which market is moving, has the most volatility, had a lot of action overnight. It's probably going to carry over into the Wall Street Open. So you may have been trading crude yesterday. You may be trading the S&P today, or soybeans, or the Russell. Why? Because that's where there's movement. And that's all you need. As long as the river's flowing, a futures trader who has a good setup that gives them a definable edge can go down and scoop up a pail of water any day. The days you need to just go fishing is when the lake's not flowing or the river's not flowing. I'm mixing my metaphors here. But I guess if the river's not flowing, you can't go fishing either. So go play tennis or, do something. Give back. Go sing in a nursing home. I don't know. Don't do this. Don't sit there and the profits you've managed to put together for the last 3 weeks, don't give them all back to the market. The market has plenty of money. They don't need yours. They'll take it, but they don't need it. So if it's a day where, man, your head's just not in it, maybe you had a fight last night with this significant other, or you got a headache, or you got a bad taste in your mouth. I mean, I don't know. If it doesn't feel right. Now, if you start having too many of those days where it just doesn't feel right, then there's a deeper issue. That deeper issue could be something like fear, anxiety. You're not convinced that you really have a definable edge, and maybe you don't have a definable edge yet because you've missed something in the training. That's why we train you 2 hours a day, 5 days a week for 90 days, and give you unlimited one-on-one mentoring, because we're just not clever enough to teach you how to trade in 5 days like the guy on late night TV. If that ever happens, you'll be the first to know. All right. Thanks for hanging with me. This 15-minute video only took 46 minutes, so good night. I'll see you in the room tomorrow. Bye-bye.